Good morning. Just double check everything. Morning, Tony. Morning. All right, let me see what the hell's going on here. Hope you had a good day yesterday, bro. So yeah, we're still in NFP protocol, which means half risk, 1 to 2 trades. I mean, it's kind of just normal, but today or yesterday and today are the main trading days, I guess you could say, inside of NFP week, CPI, FOMC, so on and so forth. But yeah, we got news at 7. Yeah, 7 a.m. Should be a pretty interesting news event. It is the day before NFP, so we're going to get into some different perspectives, how to view this. Yeah, let me do something real quick. Appreciate your patience. So let's get into this. So the bonds and yields are still doing what we talked about on Sunday, meaning that they're still just kind of not knowing exactly what they want to do. The bonds specifically are definitely in this little consolidation. Whenever price is stuck in a range, whenever it's back and forth, whenever there's overlapping higher time frame delivery like this, this is a very visual, very obvious picture you could look at and see the condition, right? It's stuck. It's not willing to really do much. It is favoring downside, at least for now, and unless this weekly bearish order block middle portion gets violated. That's a 2-week, if you're wondering. Because I had that a bit inaccurate. There you go. Excuse me. So what we see, again, the interest is still to go lower. This has basically purged liquidity, had an SMT, and that as a result has pushed price up into this volume imbalance. So yeah, it's still kind of hanging around in there. So it could still do that. I'd prefer to see us drop below this wick, continue to attack sell side unless something's proven otherwise. If we go to the 3-month chart, like I talked about on Sunday as well, the bounce or the low you could see was pretty influenced by this large wick and the midpoint of it. So we're still kind of doing a lot of work inside that. So we're gonna continue to see that as a pretty strong support level, actual support level. But again, unless this high is violated, unless these PD arrays in here are violated, my attention will not change for the downside. If we're going to look at the indices going higher, though, we're going to want, which is what I'm looking at for the most part, unless, of course, it displaces and looks like it wants to come and target something down here. But in order for intermarket relationships related to the interest rate markets to support what the indices are doing. The relationship is positive, a positive correlation between the bonds and the indices and foreign currencies. So if either of those two asset classes are going to go higher, and we want to build a strong narrative behind it, or at least have intermarket relationships agree, we're going to have to see this turn around and go higher, which again supports buy side delivery. There's been a cracking correlation throughout the year so far with the indices and the currencies. They've kind of went in and out of correlation. So that's just a testament to the higher risk environment that we are engaging in. Okay, so you got to keep that in mind when you're calibrating your risk. You got to keep in mind the news that's available, just the way that price is delivering as a whole from the last couple weeks. You can even go as far back as like a month ago, what it did last month. And you take that information, and then again, it helps you calibrate whatever it is that you're trying to use for your risk model. Not every moment in the market is a moment where you're going to have max leverage or max risk, which again, for everybody will be a little bit different. But if it's 1% and we notice these things are in place, of course we're going to want to drop it by at least at a minimum by a quarter. So if it's 1%, risk 0.75%. And then if it, is like an NFP week and whatnot, you want to try to cut it down to half of what that is, right? If you start at 0.75, you want to cut it to at least like a 0.5% of your total equity. Okay, because it's the risk environment is just too chaotic. And that's obviously very much or very important for those that are just starting to get their footing or trying to piece together their system. You want to make sure that you are paying attention to this stuff, because if not, you're going to be over risking in environments that you're not comfortable with trading in or just don't have the experience navigating. Okay, especially when the risk is a little bit more elevated, which is the circumstances we've been dealing with for the past couple months. Clearly, though, you guys that have been with me for a while, that jump on these calls, you see that there's obviously ways to navigate. But again, that's not in any way promoting the idea that you should go in and just start risking like a madman when you're just trying to learn. Because if you risk, and if you risk too much and you take a bunch of losses as you're trying to learn, and you're not yet desensitized, and you're still trying to learn models and how to operate, it's going to set you back, because instead of focusing on the concepts that you're supposed to be learning, you're focused on the fact that you lost a trade and you have to make back the drawdown. So, I know we're all ambitious and we want to get there quick, but this is part of becoming a professional, is knowing when to risk normal amounts, when to calibrate your risk a little bit lower, and just overall conditional navigation and understanding as far as what we're being presented with. Okay, that's in no way a promotion for you to be worried or scared or nervous or anything like that. It's just the reality. If there's gunfire going off in the battlefield, are you really going to run out into the middle of the battlefield, thinking acting in a way that you would act when there was no gunfire? Right? Is that something you would do? Right? If it makes sense, if that logic makes sense for that scenario, it should be able to make sense for this as well. There's a lot of gunfire going off everywhere, literally and figuratively. Okay. So, and then of course we have cracks in correlation. We have, things like NFP, so on and so forth. So again, you want to make sure that you are very attentive to what it is that you're risking, and cut your risk when you feel like you don't know what the hell's going on, like where's price going, you don't know. That is automatically an indication that you should cut your risk until clarity is a little bit more clear to you, as far as where price is going. For the most part, in the narrative and higher time frame analysis we've been doing, everything has worked out flawlessly. Maybe not flawlessly, because it's taken a while to get to some places. It's taken some time for things to develop. But nonetheless, yesterday I called out 2 targets in my free and private Discord. Well, actually 3 or 4 targets, just throughout the whole session, in the AM session. And pretty much every one of them got hit. Okay, whether it was, let's go to the chart real quick. Okay, so whether it was this high, which got purged. Okay, let's actually go to the 1 minute. Okay, we were able to target the high up here, like I mentioned, right? I targeted that 21,440. If you don't believe me, you could just go into the Discord and see that it was called beforehand, the free Discord, and this run from the lows down here was also, talked about. We navigated this as well. I didn't feel too comfortable targeting a short from here. I wanted to see what was going to happen inside this, which is the first presented fair value gap of yesterday. And, for the most part, I didn't want to really hold it. That didn't really want to hold price. So what we ended up doing was trying to navigate price through down to the lows. Once it broke below this first presented fair value gap, I mentioned that this was a potential opportunity. And then price swept that. And then once we got up above here, that was a shift. And then we classified this run higher as a market maker buy model, which, pretty beautifully delivered. And yeah, so all that was done live. Targets were called live. And yeah, if you don't believe it, you could just, go watch, or not watch, but go look at the call outs I did in the free Discord, and my private community pretty much knows the vibe already, so I don't even got to really explain much to them, or highlight proof, because they already know. That's why that's why they've been with me for so long. But yeah, just a reminder for those of you that do get value from the content, and you maybe have been progressing, or you just enjoy being here and adding value or getting value. If you can do me a favor and like the video, subscribe to the channel if you're not already, and make sure you share this content with anyone you think can add to the conversation, or can just get value from what it is that we do, because we're here to help each other, and you can help me by just supporting the channel and doing things like liking the video and subscribing to the channel and sharing the message, right? Because it'll attract people just like you guys, and that's my audience. You guys that are serious about trading, you are the ones that I want to help cater to, and play a small role in your journey to get you to where you're trying to go, or get you on the rails, focused on what you should be focused on, so then you can get to your goals on your own. You're not going to be dependent when you're here learning from me. I don't want to ball and chain my students, but eventually, hopefully, I have students that stick around just to either add value and help others, or just continue to hang out with the cool community that is like-minded. So thank you guys in advance. I appreciate it. But yeah, so that was kind of yesterday's AM session navigation, just in a quick rundown. Again, more details are in the Discord, so you can go check that out. But these highs up here. Oh wait, actually, let me get to the right place, right? So yeah, we got the same thing happening on the yields. Bonds and yields are just stuck in consolidation. That's typical, especially when we're in the months where the summer starts. We are in that time of year. And the seasonality I talked about on Sunday is basically, for the next 2-3 months, is basically promoting consolidation. Definitely for June, there's a likelihood for consolidation. The summer months, as ICT has mentioned, are generally the harder months, including January, right? It's not the summer, but January is one to look out for. September is one to look out for. And December. Okay, so the summer months, June, July, going into August. September sometimes can be a pain. January and December. So keep those in your mind. Those months you should go in automatically cutting your risk, because it's just what it is. Okay, and you can go back and study. There will be times you see in your study that things did work out, but for the most part, if you study 10 years of those months, you'll see that the underlying similarity is the fact that it's either consolidated, or it's just a little bit more wicky, more manipulated, so on and so forth. Okay, so yeah, it's a little bit of fundamental basics that you want to pay attention to for forecasting. Good morning, Harley. Good freaking morning, my brother. It's always good to have you here. But yeah, again, for those that don't know, Harley is a freaking savage. Okay, so go follow him, support his channel. He's going to be posting at some point as well, so definitely show him some love. He is a superstar in the making, that is for sure. And until that manifests, which it pretty much is, I'm going to keep screaming it from the rooftops. This kid is amazing. We have a lot of amazing students, but you know, everyone's journey is different. But you know, yeah, he's a superstar. So welcome, Harley, and good morning to everybody. Freddie, Eddie, appreciate y'all hopping on as always. But yeah, so that's essentially the view as far as, you know, what the interest rates are doing. Go take this wick here. We can see that we're spending a good amount of time inside the equilibrium, or not the equilibrium, but the middle portion of this wick. Okay, I have it marked out actually. So yeah, it's kind of just hanging around. So one thing you guys want to pay attention to is, excuse me, small ranges lead to large ranges. So if there is small ranges going into NFP or FOMC or CPI or any of these other significant news events, for the most part, it'll present the start of the week as a small range type of environment, which we've kind of seen so far. Right. So with that being said, because it's kind of been going sideways a bit, it has gravitated to the buy side. We have been inside of a consolidation ahead of the NFP. Because that's the case, I'm going to expect that, you know, we may see some, you know, pretty large ranges after NFP takes place, especially during, right? Or, you know, and then before, you know, most likely it'll be a bit chaotic. You know, it's going to want to fool you. Okay. I talked about this high up here. I talked about these down candles in here. I talked about how once it got above this, it'll most likely treat this high to that low as a balanced price range and a potential bullish breaker. You could see that that has beautifully delivered. That was touched on, or I sent a markup in the free Discord, and it was talked about live with my private community for sure. But you could see how that's all working out. You see this run on stops here. You see the new week opening gap being respected from previous weeks. The current one as well. It's kind of nested in between those. And you could just see prices responding beautifully off that. We ran stops here. We got this large wick. Take the midpoint of that. Prices closed above it. There's nothing in here telling me I want to short. Okay, unless we lose this and get below the new week opening gap, my attention is going to continue to be up here. Keeping in mind, obviously, the fact that NFP is coming. So it may not want to get all the way up there. It may dance around from this high to that low, right? It may just try to work that range. But you know, if we can get above this fair value gap, I think that would be pretty significant. Price has, again, came down, swept this low here, shifted market structure back to the buy side, and you can kind of see how London had a beautiful move to the buy side here. I believe my student Harley ended up engaging somewhere in here, if I'm not mistaken. It was in here, huh, Harley? In this candle here from London. Let's go take a closer look. I think it was like right up in there, huh? Yeah, Harley engaged this and shared his video execution, which is awesome, freaking awesome. I encourage all of you guys to record your trades. It was 3 a.m., huh? So it was right there on the second chart. Interesting. You're able to navigate this to the downside, yo. 3 a.m. Eastern. Oh, okay, yeah. So it was over here. Yeah, I mean, that was absolutely beautiful. And it targeted the new week opening gap. Swept out these relative lows, right? Relative equal lows here was absolutely beautiful. Triggered that in. Tried one more time, swept them out. Got people fooled, and then displaced back to the buy side, and it's been amazing. If you would have held it, you could have. What was that like? It was like 70 points. That's solid. I mean, that's pretty much enough. I mean, 20 to 30 points is enough, obviously, as we always talk about. But yeah, so what I'm looking at here with this, again, we swept the high up here, It shifted market structure like I mentioned, and it's just been continuing to run higher. I don't really like when London is fast. Technically, we were still in London all the way up through here. So it was a bit fast. I wouldn't be surprised if they try to maybe punch down and maybe sweep this out, then go. If they don't, right, we still have a high, low, higher high. These up candles could act as a bullish breaker. So that's definitely something I'm going to keep tabs on. And if we go up a time frame or two, this breaker, here, let me find the order block first. If I could find it. Oh wait, no, breaker, my bad, whoops. So breaker right there. So yeah, if we see this on the 3 minute, if we move, say, to the 5 minute, right, or move up to the 6, 7, 8, 10, 15 minute, you could see that this lower time frame breaker or lower time frame PD array that we saw, this breaker is actually also a nested 15-minute bullish order block. Okay, so this is the fractal nature and price. This is why you only need one model, one PD array on one time frame. If you zoom up a little bit or zoom out a little bit, a lot of times it'll be a nested higher time frame PD array as well, but maybe a different one. In this case, the 3 minute breaker is also a nested 15-minute bullish order block. Okay, so again, the PD arrays get you to very similar areas. The sequence of events that make a specific PD array are obviously unique to each in many cases. But layering PD arrays like this, getting a lower time frame, moving up a little bit into a higher time frame, finding another PD array on one that's above, and then also framing your setups on higher time frame PD arrays, like this new week opening gap, for example. There's also a daily bullish order block that I've been talking about for the past, week or so, right, which is right here. Okay, if you go back to some of my videos from last week, I pointed this out in this fair value gap. I said if we stay above that, we have no reason to look to go to the downside or have any interest to do so. And obviously it's been working out beautifully. Now we're inside this wick here. We have the previous week's high. So overall, if it gets excited and wants to continue to reach to the buy side, that is my target. We have previous day's high here. So before it gets up into there, it's going to have to break through that previous day's high. So that is our first initial target, assuming that London's high has already been, London's high was already taken. It was way down here. Again, we do have London's low down here. I'm not sure exactly how important that'll be. It looks like we've had this manipulation, set the low potentially of the week on the, for the week, right, on Monday. Yeah, Monday. And we have, again, a reattempt to this daily bullish order block, which has so far delivered fairly swiftly to the buy side. If we take the central bank dealers range projection idea and we map that lower in terms of power 3 projection, obviously it couldn't even get to a first standard deviation. That is a very bullish sign, similar to how if a wick midpoint can't even be traded to, if we're going lower, say it's an up wick or a down wick it's trading into, similar to that idea, if it can't even make it to the 50% and it just continues to run, that is an overwhelmingly, in this case, a bullish sign if it was like an up wick it traded to or a down wick and couldn't fulfill the midpoint. So it's the same with this tool here, right? Some of you guys maybe have not dug into this, and that's okay. Just take it from me, it's very important, or it's really useful. It's not needed, but if you're a person that likes power 3, you can take that very, very deep, and this is one element that takes you a little bit deeper, and it helps you project not only where price will manipulate to, line those standard deviations up with a PD array, and then once it trades away from it, you can also use the projections as a result of the central bank dealers range and flout and those ideas. You can use those as a target when you project them higher as well. Okay, that's also aside from the normal projection that ICT teaches, which is taking a high, low, higher high, taking it from the low to the high, that created that turnaround, and then you go put the fib on, map out standard deviations to the buy side as well for that price leg, and you can get some pretty accurate levels of target, right? And if you can couple these with a higher time frame PD array, it makes it even more dynamic. Okay, like this, what is that? 1, 2, third standard deviation up here, or half, right? So 50 is half. So 1 standard deviation, 1.5 standard deviations above is lined up with this fair value gap. If we move up a little bit further, notice how the, for my fib, the max standard deviation is pretty aligned with the middle portion of the wick here. So that's it's a pretty nice thing to see, right? It must be random, right? But yeah, so price targets up here and continues to race towards this previous week's high. We may blow through it, or it may stop here, present a retracement, a small retracement, then run higher again. But again, that's a little bit later. Our attention is this type of high, this is an 8-hour high. If we move to the 4-hour, we have 4-hour highs. We could just use the 8-hour one though, and then we have the previous day's high as well. So yeah. So before we get to that previous day's high, before we get deeper into this fair value gap, before we get into these larger levels like the previous week's high, there's previous day's highs, previous session highs, 4-hour, 8-hour, 1-hour, 15-minute highs. All of those things can be used in terms of context for targeting while we are targeting the higher time frame specific levels that root our higher time frame narrative or just like the narrative in a bigger picture view, right? You always want to be cemented on that higher time frame, and everything working in between that can help you with further context supporting that idea or target, but it can also obviously add extra targets in terms of liquidity pools from the different time frames, which are building the narrative to get to that larger narrative. Okay, so I hope that makes sense. Very important topic there in terms of price navigation. Pretty important targeting projections and Power 3 projections, which we just went over fairly quickly. So those topics, if you haven't dug into them, you now have something to go and start practicing, and maybe even asking questions about, because there's nothing wrong with that. That's why you guys are here after all, right? So yeah. So again, we have news at 7 o'clock. That's why I'm not too focused on the lower time frame for now. Obviously, if we go to the 1 minute, maybe you could come up with some type of argument that, there was a move here or wherever. For me, though, and my students, it's very important to follow rules. And if, the rules aren't in alignment, I don't care what it looks like, you don't take a damn trade. You stay the fuck out the market, okay? Like, it's so serious, So, so don't forget. Okay, so again, the overall view of what we're looking at, if we go to the DXY, haven't talked about that yet. If we look at what's happened, there was a new day opening gap in here from last week. Price just retraced higher, stayed inside the levels that we've been monitoring. Monthly fair value gap also was a weekly fair value gap. I kind of removed it because it was getting a little bit busy, but inside here, there's a weekly fair value gap, this high to that low. We have mapped the run up to that level. We also classified these consecutive down candles for the last couple of weeks as a bearish breaker, and of course we navigated the whole buys up here all the way down, both buys and sells, and you can go look at that evidence because it's recorded publicly how we did that, and all the different lessons taught within that. Okay, so again, where we're at right now, we have a wick here. We have this retracement that's now closed inside not only this monthly inversion fair value gap, which is way over here, but something closer to price is this fair value gap in here. Now we're below that. So I will not be bullish or have any reason to be bullish unless we get some form of a displacement trading through that, like at least, some of these levels and, pushing through volume imbalance, you can see that there's a bunch of new week opening gaps layered together like this. When price is overlapping candles, like I mentioned earlier, and there's new week opening gaps that are just constantly being traded back and forth those are, again, signatures that provide you evidence that you're in a consolidation. And there's no guesswork that, or an argument for it to be trending just yet until, of course, there's a displacement that proves it'll get away from that. My goal is to get down into here. It's been to get down into here, specifically to fill in the rest of this quarterly fair value gap. Quarterly fair value gap or quarterly time frame is the 3-month time frame, because there's 3 months in a quarter, there's 4 quarters in a year. So that perspective, eventually, hopefully you guys move on to incorporating that view, because you get even closer. And there's a reason that I'm able to call the market for weeks on end, months on end in terms of narrative and stay confident behind it. It's because I'm rooted in higher time frames. Sometimes very big time frames, like specifically quarterly time frames. We're going to do a quarterly analysis too. For those of you that haven't been here for that, we always do a quarterly analysis to try to gauge what the quarter sentiment will be. We find quarterly highs and lows and liquidity based on those time frames, so we can have that super large perspective, which generally carries on for months on end. Okay, bias or narrative doesn't change on a day-to-day basis. Bias does, because it could be bearish but have a retracement. Does the narrative change overall because it retraces into something like this? No, the narrative stays bearish. It's just the bias was bullish to do what? To reach into something that'll set up the further, in this case, decline. Okay, so bias and narrative are different, right? And classifying it that way makes it so you don't flip-flop aggressively from the higher time frame. If you're, like, for example, if you're bearish, just because it retraces, your mindset is rooted in that higher time frame perspective for the narrative, and you could just frame out retracements. This mindset also helps you know when to gauge or lower, or how to gauge your risk protocols, like I was talking about earlier a little bit. Okay, it's just another element to that in terms of dynamic risk engagements and adjustments. Okay, because it's not always going to be the same. Like I said, you have to always be prepared to adjust. And and if it's bearish narrative, your bias should always be cut in half too. Just another rule that we use when it comes to calibration of risk protocols. All right, so again, my overall intention is to try to see the price comes down into here. We're going to keep in mind, of course, that there is the NFP tomorrow, like I said. So, we're coming in with light expectations, not looking to rush things, not looking to push. I'm not a gambler, and you shouldn't be either. What instruments do you trade? I am a specialized indices trader, specifically NQ and ES at times. Reinvestment broker. Right, so but I do analysis on every asset that's potentially impactful. I can trade any of the assets that I talk about. I can trade any of them. It's all the same. And because I understand how everything works together, and that's what I teach you guys how to navigate, but because we have that skill set, we're able to go in and use the same logic, same idea, same foundational processes to then transfer into other assets, except crypto, because I'm not sure exactly what the intermarket relationships are yet. Okay, I will be there eventually. Trust me. Okay. But the things that we do, from interest rates to DXY to currencies to all the way to the indices, that process can be used for every asset. Like if you're a currencies trader, you still want to observe what the indices are doing, because it's generally positively correlated, because both the currencies and the indices are impacted by the bonds. Okay, the bond markets. These right here. All right. So and the DXY is impacted from this asset, or it's influenced, I guess you could say, because currencies chase yield. Okay, so currencies will chase whatever the yield markets are doing for every country. Okay, it's the same, right? Uh, Tony said it works for crypto. Yeah, I mean it does. It works for crypto. I have two crypto friends that trade crypto, like day trade. Um, I just, the correlation and tactics I use in terms of like even timing is a little bit off, right? Higher time frame analysis wise, every concept that I use that I share with you can be used in that asset as well. Another thing too, the way that we trade here can be very easily translated into options strategies. Of course, you want to make sure you understand the different ins and outs, which I don't know fully. I'm not an options trader. Maybe that'll change at some point, but for now it won't. But the way that we do analysis here with the higher time frame, I mean, imagine if you've been with me for a while and you can see that we call the market 75 to 91%, which has been proven, and I've provided evidence of that not only live but just over the last 3.5 years. If you can take that information or that confidence and bring it into something like options, I mean, you can imagine just do weekly or monthly options, or however the intervals are, right? If you could just do it from a higher time frame and just apply the things that we talk about, I mean, you can imagine there's another door that opens up, another vehicle of wealth building that opens up for you based on one specific skill set, which obviously has a bunch of little skill sets in between. But yeah, this is something that is amazing. The whole world opens up to you in terms of investing. This is the highest form of financial literacy when it comes to being a trader and understanding the financial markets, because these things make the world go round. Unfortunately, should be more meaningful stuff that does, or that makes the world go round. But unfortunately, it's not. So yeah. So yeah, again, my opinion is buy side for the Nasdaq, downside for the DXY, and it seems like that is coming to fruition ahead of the open. So we're gonna see what happens when the open comes. Okay, we've got this low here to watch. We have kind of retracing the DXY. We'll see what happens here. I don't think this is going to be anything real meaningful. I think this is going to end up turning around at some point. All right, we'll see. But again, we're not in a rush. We're not here to gamble. We're not here to do a bunch of nonsense because people just want to take a trade. Okay, it's not it's not how we operate. Just because you want to go shoot at somebody in war doesn't mean you just go pull the trigger on anything you look at. You're going to give away position and get your head blown off. Okay, it's the same thing in trading. Okay, you want to know when to strike, when not to strike, how to camouflage, and all the specific skill sets. So yeah, 6:30 is coming. We're going to try to consider what could be taking place, but the overall narrative is this retracement to possibly go lower. Unless something changes, which I'll let you guys know if something does change. And then, of course, the indices, I want to see them go higher. I wouldn't be surprised if, we run up, maybe fill in the rest of this fair value gap here, and then maybe give like a retracement of some kind. But once it gets above this high, I'm going to classify this high to low as a potential balanced price range. We have sell side taken here. It would be buy side taken here. So if we go from this high to that low, midpoint of that should be respected. And if you zoom up, it'll probably end up being, like I said, a bullish order block. Order blocks and breakers and other specific PD arrays bring you to a understanding of, price not needing to break through them if they're valid, at least the midpoint. Okay. I'm kind of getting into that logic a lot. Or a little bit on my YouTube and free Discord, but tremendous volumes of attention have been given to balanced price ranges and different things in my private community lately. And I'm grateful that my students are at a level where I could start slipping in advanced stuff, because you can't start there as a mentor. It may look nice and, be convincing and whatever, but, there's one bridge that you have to cross before another, so. And from what I've been seeing, both from people like Tony who support me, and some of the other students that come on here live all the time, and of course my private community students progress, the progression has just been fascinating. It's taken some longer, but eventually, like say like 70 to 80% are pretty much there. There's just like little things that they got to figure out. There's never going to be 100% of people succeeding, obviously. It's just the nature of the game. And some stuff that can't be dealt with by a mentor that has to be worked out in a student's mind is something that kind of prevents some people from thriving, like psychology and their current living situation, how they manage stress, how organized they are, how good do they follow directions, are they willing to change, are they willing to be teachable, right? All these skill sets are things that students that want to be good students, those are things that they have to, really turn into their identity, like they want to make sure that that is a pillar in who they are as a trader. Otherwise, if those things are missing, or if even one of those things is missing that I just mentioned, you could learn all the concepts in the world. You could sit here watch me crush it 75 to 91% of the time, which again has been proven. That's not just a random statistic or a window. But even seeing me do this and all these different things happening in front of you, seeing stuff in your own chart work out, even if you learn every single thing there is to learn, certain things outside of you, if you don't deal with them or figure out how to manage them somehow, they will be the exact things that prevent you from becoming who you want to become as a trader. All right, so keep that stuff in mind. It's not meant to be a discouragement. It's meant to motivate you to focus on what's significantly important, rather than being worried about crap that doesn't really matter. Okay, so again, my attention is going to be to the buy side up here. I wouldn't again be surprised if we do look to sweep out the lows in here. I obviously prefer that to not happen because that would invalidate my 15-minute bullish order block. Just put that up there. Look at the chat real quick. I was and damn near homeless, but I never gave up. I worked 2 jobs. I can really take my psychology to infinite levels now. Yeah. And I'm grateful that you found your way to this community, bro. A lot of my students have had a hard life, and including myself. I was homeless, like for real, with my family for a couple years. Then I had a kid and had a chaotic mess with that I still deal with. So we all have our struggles and things that want to destroy us in terms of psychology and financially and just morally. So we all got to figure out how to navigate that battlefield itself, because there's a technical battlefield, then there's a mental battlefield, and you have to have processes for both, and then of course management of trades and all these different things. You have to have a process for each of those things, which is why I feel the students that have come to me, it's why I feel they've done so well, or at least get themselves to a level where they can start to run on their own, is because we are so systematic. Nothing is done without a process. No decision is made without a process being justified. Okay, whether it's managing our mindset, just trades, getting to a trade, figuring out what we're doing, anything in between in terms of what it takes to be a trader. Everything has a process, and I have them separated in different categories. So go check that out if you haven't in my free Discord, and in my private community. Again, it's everywhere in my private community. So if you're not in that community and you do want more support and you want to take this to a deeper level, it's not for everybody. It's basically an apprenticeship program. You get to watch me 6 days a week, even when the markets aren't available. Just go through my thoughts and talk about all the things that have gotten me to where I'm at and how they can benefit you. So yeah, that's the value in that community. If that's something you guys are interested in and you aren't in that community, if that's something you like or find interesting, definitely consider. Or just we can hop on Zoom and talk about what's there and whether it can be beneficial to you or not. But yeah, So pretty much what we just talked about has beautifully worked out, per usual. Now we got this small regular trading hours gap. I really don't like that. Overlapping candles ahead of NFP, small regular trading hours gap. A lot of times those are recipes for chaos and deceiving price delivery. So we want to make sure that we keep that in mind. Not be fearful, but keep that in mind. So drop our risk by half or a quarter. Buy side again has been taken. So again, everything's working out the way we want it to. And I would have to say that unless this order block's broken and we break back down below this low, we're going to have to study what it does when it gets down there, if it does end up doing that, which looks like that may be the case. May just have purged this out to run back into the range. But how it delivers below this low, if it does get below that low, it's going to be something important because, again, we also have relative equal lows down here that I might want to reach into once more. If we're bullish, obviously we don't want that to happen. We want to see it continue to support the buy side PD arrays or discount arrays. So yeah, this big turnaround here is pretty convincing that we're just going to be stuck in this range still. So we want to see how this 15-minute order block is going to behave. And if it can get back above these levels, that would be something I would be interested in observing. So I want to go grab this real quick. So the first 30 minutes, where's it at? 21. So the first 30 minutes of the open, which is at 12 a.m. Eastern and 9 p.m. Pacific Standard Time. So if we can get that range, that first little range, map that out real quick. Is that yeah, right there. So if we could stay above this, and we could stay above the first presented fair value gap. So this, the first presented fair value gap and the regular trading hours gap. If we can get above these levels, that would make me interested in still pursuing buys, especially if we could do that and then again stay above this 15-minute order block. These specific levels that I've just mentioned is something that I've been sharing recently. For those that don't know what it is, there are specific levels in price that help you justify a particular run real time on the lower time frame. It's a tactic that I've been using for quite a while, and again, a lot of my students are at a level where I can start to implement different things that can amplify what it is they're trying to do in terms of narrative, because there's stages to this learning. There's levels to the concepts we choose to operate within, and you always got to cross one bridge before you cross another, like I said. But yeah, it's going to be an exciting rest of the year, that I can tell you. There's a lot of stuff that needs to be talked about, but yeah. So we could see how price took that buy side and now is racing to those equal lows I mentioned earlier. So let's see what happens in here. So this low to that high, if we are going to justify the price is going to take this low out, we should be able to stay below the midpoint. Shouldn't have to come back into that. It's already delivered here technically. This could be looked at as a visual, or in a visual sense, being the YouTube model. We do see how this fair value gap has held. We have overlapping fair value gaps, so that generally is going to hold price. Narrative, of course, is still bullish, but of course we're reaching down to these lows here, it looks like, and we'll see how it delivers through that low, and depending on the behavior below that low, we will start to make assumptions as far as whether we should be able to trust buys in the short term or just adjust to shorts. Seems like we again have this run up, broke down below the low, midpoint should be respected. This fair value gap in here should be balanced because it's traded away now, traded both sides, then traded away. So if we get above that, like we ran stops here, if we get above that and leave these lows, that will be pretty convincing that we'll get another leg higher because we're still inside this 15-minute order block. Got the middle portion of that, so now it's trading into that. But that would be the only time I'd be considering any type of potential buy position, I'd need that justification. And then, of course, we layer the regular trading hours gap, first presented fair value gap, which first presented fair value gap is, yeah, it's right there. So yeah, breaking above the high I just mentioned on this chart here, closing above the first presented fair value gap, that will be, again, significant in order for us to trust continued buy positions. DXY is still falling, so that's a good thing, supporting the buy side delivery. So pierced the buys, pulled them into trades. Stops were probably down here. Now they've purged them out. So let's watch this order block. Again, we have a sequence that's taking place here inside the breaker, inside the 15-minute bullish order block. So we want to see how price is going to respect that going into the macro that comes later on. See a very back and forth in here. Pull up DXY. So DXY had a really strong run higher, and then it just broke down. So again, that's something that we would like to see for price to continue going higher. Kind of situate this real quick. So we've got the Dow, Nasdaq off that bullish breaker, order block, right, overlap. Then we got the S&P, very similar sequence of events. So yeah, go to the 4 hour. Still got a little bit more of the fair value gap. Again, just like I said on that lower time frame, go back to that. If it was to break above this fair value gap in here and then get above it and use it as support, that is supportive of price continuing to go higher. And again, on this 4 hour time frame, it's the same type of idea with this, but this is a higher time frame. It just shows the fractal nature in price. Something you observe on this lower time frame in terms of logic, like this fair value gap idea. When you observe that, you can also take the same logic to the higher time frame, and then it can be just as effective. But when you do things on the higher time frame, again, it can help justify larger moves, and then of course root you in the actual narrative. So then you can get in line with where the wave is really pushing you. Okay, so let me. Not sure where my thing went. Okay, let me go there. Okay. So again, my eyes are down here. I'm watching to see if it wants to blow that out. And then once it breaks down below that, again, I'm going to observe what the behavior will be. We're still technically respecting the bullish breaker I've been talking about. Still technically doing it. We're kind of range bound at this point, though. So, we got to wait and see what it's going to really want to do before we make a decision. So yeah. We're going to remain patient and see what it wants to do here. See if we can't find a good opportunity. Right? If your initial idea was thinking, for whatever reason, maybe you were justifying that you're okay with potentially taking a short down here to try to get down below these lows. Well, you could have framed that idea here to there, and then if you're solidifying minimums, which should be your main objective when you're on NFP weeks or start of the new month or start of a new quarter, ahead of news events, specific news events. You want to target minimums. You don't want to do too much, right? So this here, could have been something offered. Like I said, from this low to that high, if it was going to drop, it should respect that. It did for this moment. We'll see what happens with this. Yeah, this is not convincing that we're going to look to have any meaningful short idea. I do not like how they left this. So I would say if this low is violated for the Dow, we could look to target the equal lows here. And if that does end up being the case, then of course, we'll probably see a deeper dive. But again, until that low was to be violated in here, I wouldn't be trying to force any short ideas, just simply because we have a very clear, obvious target in this high here, and the narrative again is bullish. We have relative equal highs up here too for the S&P. Okay, so it's all very similar in terms of characteristics we see. The buy side there was beautifully swept out. So we got this wick here. Okay, if it gets above that wick, your expectation should be this high up here. And then if it retraces into that wick, it may set up an opportunity for dynamic support in which you can use to potentially frame out whatever idea you're trying to use. This bullish breaker here that I outlined, though, has continued to hold up in price. Probably has people sweating bullets, though, trying to hold through this if they did take an entry. There's just really nothing for me to have wanted to engage on this lower time frame. Now, if I was going to execute just off of the breaker here, which very well could have been the case, obviously that would have been something justified within my model, because I am specifically a breaker 2022 YouTube model trader, a market maker model trader, and continuations of each of those, and an institutional order flow entry drill trader for my last resort. So any of those models showing up, generally I go in looking for one, but keep tabs on all of them. But whichever one I can identify, in this case, that breaker from the 3 minute, that would have been something that I could have engaged if it wasn't NFP week. Maybe I would have been aggressive and done so, but I didn't. So we got this fair value gap here, run on stops. So let's see how price is going to behave here. Remember, I said from this low to that high, if it was to get back above the midpoint, that is something potentially justifying price's willingness to want to continue to go higher. Okay, so we'll see if that unfolds here, because we broke the high, and the thing I just mentioned in here turns into a buy. Again, we'll see the justification of that logic coming to fruition right in front of you, which I think is a pretty good experience. Right, so yeah, let's see. Again, I don't like when there's equal lows or equal highs. I don't like to buy equal lows. I don't like to sell equal highs, especially early in the session. Kind of, it's a more aggressive view. There's nothing wrong with being aggressive sometimes. But weeks like this, I tend to be a lot more conservative. Maybe you're more aggressive. That's fine. Okay. I'm just here to give my opinions and perspective on things. So yeah, let's see how this first presented for value gap is delivered. Again, we're above the first 30 minutes of the overnight range, regular trading hours gap, and the first presented fair value gap from today. So we're above that. I would have much rather preferred them to sweep out the lows here. This may be telling us something, though, right? It may be telling us that the Nasdaq is exceedingly bullish, right? Let's look at this real quick. Let's observe the lows. So yeah, there's SMT at those lows within that first presented fair value gap. So that, in my opinion, is pretty convincing to me. That price is going to still want to try to punch higher. So that first presented fair value gap idea, or the fair value gap I mentioned, presenting the YouTube model idea, would be something I would have supported. If I can get my damn chart back. Where'd it go? There it is. Okay, so yeah, it did play out. Right, so run below the low. Fair value gap. and prices delivered. So again, if you follow the minimums, 20 points was offered there. We're not in the macro yet. That's essentially what I'm personally waiting for. But again, this idea here I talked about with the low to high being respected, trying to target these sell side liquidity down here. Although that didn't fully come to fruition, you don't have to have it fully come to fruition to be profitable, okay, or consistent. This was, it delivered enough. It delivered the minimums. You can make the argument for the YouTube model, for the breaker, right? Down candles, buy side delivery, low taken after the buy side delivery, presented a fair value gap. If you didn't use that, you could just use again the breaker, and that would have been a contextual idea that made sense for a person that was interested in taking a short. You're not incorrect if that's what you were assuming. Even if you're bullish, you'll still be able to catch sells at times. See, so this here too, right? It swept the low, got above the breaker, went back, broke the midpoint of this range I said should hold if it's going to be shorting. And again, the fair value gap I talked about, it's moving higher. And so again, my overall target I would like to see is these highs up here. But of course, before we get up there, I mean, you could make this argument for this high, okay? Similar to this low, right? That's not a higher time frame view. It's probably not the overall narrative, but still, it's a near-term target. And you don't, just because you're aiming for a weekly or daily high doesn't mean you can't catch something like this, the AM session high. If you can make a framework going in that direction, which we were able to paint out as it was delivering while we were talking about some other contextual ideas as well. But yeah, the overall analysis from Sunday is beautifully playing out to the buy side using this fair value gap and the order block, which was specifically highlighted to support price going higher. And, yet again, just adds to the fact that, or it adds to the statistical evidence being 75 to 91%. The last month has been 76%, which is kind of strange. That's just like executions though. So, but yeah, overall for where price has gone, we've been, high 90s, especially on the live calls. I mean, it's every single day we're finding liquidity for it to draw into, and it still even surprises me, to be honest. And seeing my students do good too, it's like even more surprising. It's like, holy crap. Like I never, what I thought this was going to be was an understatement, right? It's going to be the same for you too. So yeah, let's see how this fair value gap behaves. Now, since we're above this high, this up candle here, this entire up candle becomes another bullish breaker, or part of another bullish breaker. So we should be able to respect this. You go from this high to that low, should be able to respect the midpoint, and we should be able to continue going higher if we're going to continue to support our initial buy side liquidity that we labeled and mapped out up here. Right. I could say that if we lose this low, again, we would use our contingency plan and move down to targeting these equal lows, because now they added another layer. So if that is going to be targeted, and we present another seek and destroy, which yesterday started out as a seek and destroy too. But if that's presented and we pull right back into the range, you can also somewhat make an argument of maybe this consolidation turning this run higher into a market maker sell model to target the lows. This here, if you go to the seconds chart, like the lower seconds, like maybe the, let's see, 5 second, this here is a market maker buy model. Okay, and that's a market maker buy model inside the small retracement to go higher and break above this high. Okay, so maybe that kicks a light bulb in as far as how dynamic market maker models are. You could use them on all time frames. It's like every other situation, but it's definitely my favorite aside from breakers. So yeah, we swept this low. Let's see what that turns into. DXY is sideways. Yeah, for the most part, what we have called and wanted to see, which is price going higher, has happened. the first target was met pretty quickly here with this candle. And then of course we got above the first presented fair value gap, the regular trading hours gap, first 30 minutes of the overnight range. So now we're monitoring what this is going to do as a result, because now we're basically reverting back to the middle or the equilibrium from this high to that low. That is significant. It's going to be needed. It's going to have to respect that for us to continue to support or trust buy side delivery here. Clearly we are in a stop run heavy environment, high resistance, more difficult somewhat environment. But again, we're able to still navigate and make sense of the chaos and even call opportunities like I did here with this one going higher. So now we're just going to wait. This order block here is being closed above. I would really like to see DXY displace to the downside if we're going to continue to want to see buys. I'm still supporting buys, right? This low, yes, it got purged, but that's all it did. It just purged it and closed back above it. Wicks do the damage, bodies tell the story, and the bodies are telling a pretty clear story here. So, but again, I can say that if this low is violated, buy positions are off the table, and our attention would then quickly move down to targeting these lows, and then we'll see what happens if it was to do that, because I would assume that if that takes place, it's probably going to sweep that, then give the real move if this one doesn't present, or if this one isn't presented as the real move here from this setup, which I'm going to support, right? I'm going to support this continuing to go higher from here. The macros kicked in, so we'll see if that gives us some more juice to push higher. Watch this wick, how price behaves within this wick. Break it into quadrants. If we could stay above the upper quadrant and the 50% level, that'll continue to tell the story of buy side delivery. And you couple that with the other things that I've mentioned, like this level here, regular trading hours gap and the first presented fair value gap, and then that higher time frame bullish order block and fair value gap that supports us going higher. Couple all that stuff together and you have a pretty clear picture that presents you mad clarity, right? So, and trustworthiness within what it is you do. So yeah, we're going to continue to watch. Not really anything aside from this that I wanted to execute on. So, and I didn't take this. I chose from over here to wait till the macro. So I need to see something in the macro here to give me something to execute. Of course, I could have taken the entry. I did call it out ahead of time. But yeah, I'm focused on trying to figure out what price wants to do so that we can catch the lion's portion and provide you guys specifically the most clarity as possible. And that's, on my live calls, that's more of a concern than what I'm personally doing with my finances. Because that's why I get on here, is to help you. It's not to toot my own horn, it's to show you what's possible. And if someone like me could do it, dropped out of high school, was homeless, and everything else in between, what makes you feel like you can't? So, that's always what I'm thinking about when I'm doing these calls. But yeah, you could see this fair value gap is holding. Pretty beautiful respect to that down wick, which again is something that is supportive of what it is we're trying to see. And of course, the target I want to see entirely is going to be this blue line up there. So yeah, this is acting, like I said, in a balanced price range fashion, keeping the middle portion available. The first presented fair value gap is acting pretty dynamic. Presented 1, 2 opportunities. Turtle soup here. I'm pretty confident if you look at these lows. Let's move to the Dow. Okay, not much there. Cracks in correlation there. Now we can see that the correlation's kind of cracked too. But I'm watching these lows here. Let's look at what S&P has to say about that. So that was 650. Lower lows. Yeah, so what I was looking for right there, what I was trying to highlight is the possibility for a SMT. It could have sent price higher. This is concerning to see these other assets go against what the Nasdaq's doing. That crack in correlation, remember what I said about the Dow. There's a chance for it to blow these out if it fails and breaks this low. So that's coming to fruition at the moment. So again, what we see here through this relationship, what we're observing with the other two assets declining, the S&P and the Dow, but the Nasdaq is kind of like reluctant to do the same. That is providing us evidence that the Nasdaq is the stronger or more interested in the upside type of asset between those three relationships. So any buys that happen today are going to be best served in the Nasdaq because of that observation, because it's the strength holder. Now, if it was the other way around and we were bearish, say the Nasdaq was overly dropping while the other indices were rallying, that shows you that the Nasdaq, especially if there's SMT that's bearish, it shows you that basically the Nasdaq is the weak or the weakness holder, or the one that's more interested in taking shorts or diving down to sell side, which would then present you with an idea that the Nasdaq would be the best short opportunity out of the three. But again, this is the buy example of the overall relative strength analysis based on the relationships between the three indices. Again, if you just look at the market here, you could just see the delivery in each daily candle, and you could just see this is a harder condition to trade within. So if you've been taking losses inside this sideways delivery and you're just learning, it's irrational to beat yourself up too aggressively. Okay? I mean, you shouldn't beat yourself up at all. Okay? Like, what are you beating yourself up over? You know, if you're not following the rules, okay, well, follow the rules. You know, it's easier said than done, obviously, because lots of things spiral in our head. But, you know, slowly work your way to being better, building better habits. Start being more disciplined in your real life. So then that can eventually carry on into your trading. You know, because who you are as a person is reflected in the market engagements you choose to operate within. So it's a very underappreciated reality to trading. You know, so yeah. So I'm wanting to see what this specific range to the buy side in this upper portion of this bullish breaker. I want to see how this is going to behave. Actually, let's actually remove that. Let's look for, there we go. Got that order block there. So remember the 15-minute order block, everything that we mapped out in terms of framework, in terms of what we wanted to see hold and how we wanted price to deliver, it has flawlessly delivered again, yet again, over and over and over. I did point out one opportunity that, you know, I'm not a financial advisor, so I don't advise you to participate in anything that I do. You know, prefer you just to learn and then make your own decisions. But if you were confident and you chose to engage on a demo, okay, and take that to the buy side following what we talked about, clearly that was a profitable engagement or for either education or, you know, demo profit, right? So yeah, remember our target is up here, 21,640. I like round full numbers, so let's go 640. I don't like the cracks in correlation we've been seeing. It's very, very risky to do anything when there's huge cracks in correlation, because at any given moment, a switch could flip and price could go against you and kick back in line with correlation. But again, the Nasdaq is the strength holder of the three, and clearly it's had the best, most energetic run higher. So yeah, so within this short amount of time, I think it's been under an hour, or no, an hour and 18 minutes. Within this short 1 hour time period, of course, we pointed out the idea for a short potentially, you know, as it was kind of delivering, as opposed to the overall narrative. So that hopefully made sense for those of you that maybe had a sell-off mentality. And just know that you're not incorrect if you were thinking that way. Short term, if you're thinking long term, this is going to drop because you saw this, you're totally wrong. And you want to change that. And just remember what I say about the higher time frames. But, that was something that was offered there. But then, of course, when this happened, I said, watch that fair value gap. It stays above. It'll, most likely deliver to the buy side. I was more confident in cementing buys rather than shorts, which is going to continue to be the mode of interest for me. So, yeah. And then, of course, like I said, this beautifully delivered. And it's just the way it is. Okay. So let's see if we can get the excitement to try to push us up through this buy side liquidity pool up here, which again is what I would really like to see. Okay, we have purged out the initial target, which was the high up here. That was beautiful. But again, the second layer for what it is that we're doing is this closure of the entire, I think, what is that, 4 hour? What fair value gap is that? It's not a daily. I must have put it too low. So yeah, there's that one right there. So that's what I would like to see. All right, so hope everything has made sense so far. Hope that you've either learned something so far or just kind of amplified what it is that you're already doing. So yeah, and inside that little fair value gap up here, right up in here that I just kind of slightly hinted to, I did take an execution there. Again, I'm not here to be a signal provider. Okay, although I do slip them in here and there, and I hint to it so that you can make your own decision, because that builds independence. Okay, so I was able to take this from this low to the high up there. Let me pull that up for you real fast. Well, it was the only entry. See, I didn't enter anything else. Whoa, what's happening? It's the it's a real account. I can move this thing. Real account. Top step. And 29 points exactly. All right, so again, this is all under the impression that we're going to try to reach for that buy side liquidity. Because it's NFP week, I'm catching scalps. I'm not here to catch big ass swing trades. There's a time and place to do that, and right now is not the time or the place to try to do that. I've called so many swing trades today so many swing trades this year, more than I have in prior years. For those that, because I've had so many people come up to me that say they can't trade on the lower time frame. So I've been making it even more clear as far as how you should be navigating higher time frames. I definitely wanted to mention this perspective because, it hasn't been super obvious for some because, I'm not really too sure why. I'm going to try to fix that though, eventually. But everything that I've been doing in terms of the process for higher time frame delivery and navigation of bias and narrative and what's important, what's not important, every single Sunday faithfully for the whole year has been to assist not only those that are day traders that want to become better at overall bias and narrative, but I've also again laid amazing framework for anyone trying to be a swing trader. Okay, at least in terms of analysis. For those that are swing traders, especially for those that are in my private community, just send me a DM and let me know. I know there's one student I've been talking to that says that the lower time frame is a bit hard for his schedule. So again, I don't care what kind of trader you are. I'm here to help each and every one of you. I don't care what style you choose to trade. If you're really new and you're trying to join, remember this is an apprenticeship program, so it's kind of like, I've heard that it's a bit intermediate. It's not for like the basics of the basics. All that's required though for you to move from very basic understanding to intermediate understanding is just to watch certain ICT videos. You know, just watch some of those videos. Maybe I'll make my own like beginner course at some point. You know, it's a lot of work, so I haven't really tried to do it. But if I get enough requests to do so, I will absolutely do that so I can help you guys that need that type of assistance. You know, but yeah, if you're gonna join my private community, just know that it's somewhat intermediate, and doesn't matter what kind of trader you are. You know, you could be a swing trader. I don't care. You could be an options trader. Even though I don't know much about options, the analysis is still the same. Okay, as far as what we're trying to do, of course, depending on, you know, how like what you're doing as a trader, some stuff may vary in terms of execution and the risk and different things. But overall, the stuff we do here is universal. This stuff is so universal that even if you're investing in your retirement and you have a self-directed retirement account, you can look to use the analysis concepts I employ and teach everybody, based on what I've learned from ICT, obviously, in terms of long-term investing, right? Like overall retirement account positioning, stuff like that. Again, I'm not a financial advisor. This ain't financial advice. You can have demos on those as well for IRAs. But yeah, you know, it's helpful across the board. You become a universal investor rather than just a one-trick pony day trader that uses the 1 second chart. Okay, it's not even going to be effective if that's what you do. But yeah. So again, this low to that high took that for 29 points. We called out this one, which is one that I should have entered, but I chose not to. I wanted to wait till a macro. We got into a macro, followed my rules, and it was a profitable engagement. Obviously, it turned quickly away, so DXY is also kind of rampaging higher. So we'll see. Remember, if it was to break through the middle portion of this area I mentioned earlier, again, we have reasonable contingency targets or opposing view targets that we could then quickly look to adjust to if we feel the need to do so, which is down here. All right, we got this is relatively equal. Again, I would prefer not to do this and come all the way down there. It's not what I favor overall. But, you know, let's see how it delivers in this. See how it uses this for value gap. We'll pull up a bigger one. Let's get that 1 minute. So there's a run on stops up here. There's a shift in market structure. For me to want to look to take a buy given this scenario, I would have to see this fair value gap get traded into and used as an inversion. Yes, it kind of puts you up a little bit higher rather than the perfect entry. But again, the conditions we are navigating are going to be harder than normal. Okay, but again, we've shown evidence that once you are able to navigate this stuff, right, and you know what you're looking for, it doesn't matter what condition you are presented with, you'll be able to find something. And if you're not over trading and over leveraging, even if you're wrong, who cares? Okay, just figure out what you did wrong, figure out what you missed potentially, and move on to the next. When you win a good trade, on to the next. Celebrate for a minute, be like, oh yeah, I love myself for being so amazing, or whatever. Okay, and then just quickly move on, because you can't get too high and you can't get too low. Because once you're too high, that's when over trading, over leveraging, and other issues that are ridiculous come into play, and they set you back. And if you're too low in confidence, that's when you hesitate. That's when you get analysis paralysis. That's when you exit a good trade too quickly because you're underconfident, right? So there's a balancing act that takes place between many different things, especially what I just mentioned here, that has to be focused on. That's why in my private community, any student that comes to me, the first thing we focus on is mindset and expectations. Because most people are completely unrealistic. They are, you don't have to think you're going to take 10 years to do this, but if it took you 3 years or 2 years to do it, adding on to whatever experience you've already had, if it takes the additional, 2 or 3 years to do it, and you could end up quitting your job or doing whatever you're trying to do because you're efficient, would it still be worth it to you? If you say no, then trading's not for you. Plain and simple. That's not something people like to hear. Sorry. Okay, not sorry. This is not for it's not for the weak. It's not for people that think they're going to be the exception. I mean, you could think you're the exception, but eventually that's going to change, either by you making that change in mindset or the market just completely obliterating you. So then you're forced to make that change if you want to really be a trader. Okay. So yeah, it's very, very important stuff. Right. So yeah, as we watch price unfold here and watch this fair value gap to see what it wants to do, if it wants to break above it and go higher, which is what I'm waiting on, or break down, sweep the low here, and then try to target the equal lows. While we're waiting for this, do you guys have any questions? Because the last hour and a half, I have fit so many things in here, and a lot of it, it's talked about all the time. I know that I do have some new students that come across me though, so I want to make sure that you guys can continue to learn how to follow along and see what's important. So if you guys have any questions and based on what we've done so far, definitely let me know. It could be about bias and narrative, risk, mindset, whatever. It doesn't matter. Whatever can benefit and help you the most. Because again, like I said earlier, that's why I'm here. I'm not here to listen to myself talk. I don't even rewatch the videos that I post, because that's not my concern. I look for feedback and then improve off that. I'm that focused on you guys and what benefits you the most and how I can serve you the best. Both here on YouTube and then in my private community, of course. So yeah, just let me know in the chat if you have any questions. Again, there's 9 people on. I think that's the most we've had since I've been streaming all at once for a lengthy amount of time. So I'm grateful for the time you guys are sharing with me. Again, I hope you guys get value continuously and keep showing up, because students like Tony and Harley, who's in my private community, and Freddie, who's new, and a couple others that are online right now. They've been showing up consistently, and they've been getting tons of value and updating me with amazing things, amazing progress in such a short time. It's insane. It shows the value of what it is we're doing here, and it keeps me motivated to keep doing these things. And again, I talked about something like a month and a half ago, where I'm probably going to incorporate one more live stream, possibly. I have to figure out, how I'm going to situate that. If anything, it would be on a Thursday. But I have to see how I'm gonna do that, because I have obligations and need to make sure that I can fit that in. I want to do it. I really want to do it because I appreciate you guys, and I want to see more of you succeed. And so we'll see how we go about that. And again, if anything, those that do want to be on live calls with us more, those that want to connect with people like me on a deeper level, or students like Harley, one of our superstar traders, rising like a rocket ship, right? If you want to connect with students like that, or just me, myself, more, and have more live streams, more live calls, so you can continue to build that experience. Again, that's offered in my private community. We go live every single day. Sometimes, obviously, there's it's going to be 5 days instead of 6. Sometimes it'll be 7 days a week. It just really depends. But no less than 5. So much more live calls, personal lessons, private lessons, catered to what my students need. Excuse me. And it just gets a lot of questions answered. It's more personal. It's again an apprenticeship program, and the vibe and effectiveness that we've been able to achieve, is very much because of the amazing students I have, and their opinions and insight as far as what they think would benefit people the most. Even my style of engaging trading and talking about what I talk about, is also influenced by what my private community students have told me would benefit them the most. So I carry a good amount of that onto my presentations here when I'm doing this. And we just continue to get better, for one, me as a mentor, and them as students, and then now you guys as well who come on live continuously. So yeah, we are having some motion in here, getting above the fair value gap. So again, we got above that. That is indicative of price now using that as an inversion, balanced price range, and then price is going to continue to go higher. So the midpoint of this overall fair value gap, because it's been delivered down to the downside, swept stops, rejected from this bullish breaker again, and now we've gotten above this inversion fair value gap. The mid portion of that is a line in the sand. So we have that middle portion, we have the swing low here, and then we also have this fair value or this low down here as well. So those are my 3 PD arrays for justification for price to go higher. Remember what I mentioned earlier too. Again, this is just yet another example of this concept I've been sharing with everybody, using the first 30 minutes of the overnight range as a reference, the regular trading hours gap and the first presented fair value gap, and how price behaves. Is it staying above that? And is the bias overall in the higher time frame favoring bullishness? If we can see these lower time frame references continue to be supported like we do here, we can continue to march higher, targeting buy side. And then of course, if it was to the downside, you would just reverse the overall view, and then want to see price stay below that those references to then continue to watch price continue to go higher. And then of course, we're watching each PD array as it forms, keeping tabs on things like the 15-minute, which is what we rooted this run higher off of. And then of course, the low down here was from that daily bullish order block as well, and fair value gap, which we've been talking about. Or actually, I think it was down here. Yeah, right there. And so this entire run higher, even with these whipsaw types of delivery, we've been able to justify specific modes of operation, targeting specific liquidity pools, that being this buy side, and now the deeper one is up here. If that is fulfilled, I can say that that'll be done. That'll be it for me. But again, no matter what the condition has been, okay, especially this year, it's been undeniable that we're at a point where nothing can get around us. Doesn't mean we're perfect. I take losses. I've taken losses live. I take losses sometimes with my private community. But the benefit is I have a good amount of experience getting over those things, and obviously recovering drawdown and stuff like that. So the insights we share, even when losses happen, are dramatically impactful. Okay, because for one, it shows that I'm human. I mean, 75 to 91% is a pretty crazy statistic. I mean, it's insane to me. Like, I can't even believe that within that, even 75% of the time being correct, I can't even still sometimes fathom that that's the reality. It's hard to grasp the reality of it because of where I started and how it was at the beginning. And, some of you guys might be at that level too. Just know that there's light at the end of the tunnel, and, staying here, like watching things like what we provide, continuously studying ICT, trying to change your perspective on losses, and just continuing to gain that experience on a daily basis. Not always trading every day, but at least watching. These are the elements and building blocks to get you to where you're trying to go, and like external things like this community, for example, and the live calls that I do. It's obviously a cherry on top. I never claim to be a be-all, end-all. I give students the tools and share my experiences with them in certain circumstances that I've had to overcome, which is very normal, right? It's the same stuff that everyone deals with. But the perspective I have helps them see reality, see certain things and maybe areas they were thinking incorrectly about, and then they build their own processes around it, around any of the problems. They add some of the tools that I use, and it benefits them. And I'm happy to do it, both here and truly appreciative for those that think it's a worthy investment to invest in me, to invest in them on a deeper level. So this community from all directions is is going to become great if and large, solely off of my students, and their progression and their progress. I'm not a very flamboyant individual. Okay. I'm not a person that really cares about being famous or any of that. I would actually rather not be famous. Okay. If we could hit 10,000 subscribers on this channel, that is enough. Even 5,000 is enough. Because I know that's 5,000 souls. If I can get 1% or 2% of that, that's a good amount of people. That's a very nice amount of people being impacted. We already have 37 students that are, in the last couple years that have done amazing feats, and we got about 36, 37 again, or more like 40 students that are well on their way. And of course I have a decent amount that are still kind of going through it, but we're getting them through it. They hop on continuously and they're doing everything right. But yeah, you guys are in the right place. Again, I appreciate you guys. Can't say that enough for the time you spend, because although it's a small community, we punch well above our weight in terms of how we trade. It's going to get to the point where all of us are going to be able to out-trade anybody. And, hopefully we can maybe go take over tournaments like the Robins or something, like everybody always tries to talk about. There's lots of fun things planned for the future too. So, again, thank you guys for the support. And yeah, so let me ask you guys this, since we have a good amount of people on. How long have each of you guys been watching my content, right? And then after that, if you guys can answer this question too, what is one thing, based on your experience of watching me trade and sharing the things that I share, what is one thing or one or two things that you feel have been the most impactful to you? If you're new, obviously, you could still give me your opinion so far. But yeah, if you guys could answer those two questions, how long have you been watching my content, and what has been the most impactful things that you guys have been able to gain from your time here with me? That, what makes you keep coming back? I would really like to know these things, just so I can continue to amplify whatever those things are. Because again, you guys cultivate what this community is like. And, similar to how my private community cultivates how that community's ran and how it's operated. So yeah, if you guys can do that for me, I'd really appreciate it throughout the call. So yeah. We had somewhat of a similar behavior in here yesterday. It had a similar, quick displacement, reversal, then stuck for a little bit, and then it picked up a little further. But we'll see, since we're closer to the NFP time. We'll see if we'll see if it has any interest to want to continue to rally. DXY is definitely supporting that, so I'm going to continue to support that idea. Again, we talked about the short idea down here for those that thought about sells. Talked about that as a possibility to seek the lows. Overall idea has been favoring buys from the start. It hasn't adjusted overall. It's been the same. The 15-minute order block is held. Bullish breaker is held. Once it got above swing high here, got above the regular trading hours gap and first presented fair value gap, I pointed out the potential buy in here. That delivered flawlessly. First target for the morning was over here before this took place. That was purged quickly, and then obviously it retraced, stopped these people out. And then it's just been gravitating all the way, right? Talked about this specific idea. I showed my execution on my live account with Top Step. Took that for 29 points exactly. Closed out. Obviously, it retraced against that. Again, that's all we're looking for is 20 to 30 points. NFPs tomorrow. We're in a new week of a new month. A week before a quarterly transfer from one quarter to the next, from the second to the third quarter. So, it's expected to be kind of how it is. Cracks and correlation, consolidation, lots of stop hunt type of delivery, and it's just the way it is. What I just mentioned there, make sure that you write that down. Okay, and then I mentioned the months of the year that are sometimes problematic in terms of seasonality, which is January, June, July, going into August. Sometimes all of August is a shit show. And then December can be a problem too sometimes, a lot of times, because it's the holiday, So note those as a, likely disruptive time. Don't be fearful of it. There's obviously moves that we could take and frame out on any time frame at any given moment of any day. The question is your model there? But that information helps you gauge your risk properly, so you could cut it lower. I wanted to make sure that I just reiterated this because it's so important. Not every single day is a day that you need to go in risking your full risk. Okay, the noobs do that. Okay, because they feel like cutting their risk is going to make them take longer. When in reality, if you don't cut your risk and you go into big drawdown, it's going to take a whole lot longer to get that back versus you just adjusting your risk and not taking so much damage on the days where it's just a straight war, like a battlefield, right? So yeah, if you haven't thought about things that way, definitely consider that mindset adjustment. Yeah. So again, the whole buy side objective, the narrative that we've been supportive of, price getting above this fair value gap here, turning it to an inversion, us watching that as a potential area where price will launch up to our overall target, which is just filling in the rest of this fair value gap. That view still, has validity. It is kind of slowed down though, right? Notice we went pretty quickly throughout the macro, and then the macro closed out, and now we're stuck, right? So the best idea, I think a news event just came out, huh? Yeah, 7 o'clock. When was it? That was down there. Okay, so yeah, the news was used to push us lower. Manipulation off of a news event, typical, right? That's what they use the news events for. Think about this too. ICT has said, when we receive the news data, price is already priced in where it's going to go, right? So the data comes back late to us. So smart money or whoever that gets the things as an insider, they have all the information ahead of time, how it's going to impact the economy or whatever. So they have that benefit, right? So when we get it, looking at the data doesn't really do much for us, except when we look at the data, it's going to be manipulative. It's going to manipulate, and if we're rooted on the higher time frame, like we are, which has given us that 75 to 91% accuracy rate for bias and narrative. If we are rooted in that higher time frame, who cares about what the news is doing? You want to use the news as a volatility injection moment. So it's injecting volatility continuously, okay? And that's why you want to trade around when those news events are coming in. Not at the news release, obviously, but after. You don't want to trade before on some news events like NFP or FOMC or any of these crazy news events, because they'll rip your face off, and they're used to manipulate. So that's why if you get into a trade or have gotten into trades and got stopped out ahead of a news event, but it goes in your direction later, that's why you're caught in the manipulation. That's why you got to wait. It's a very similar tactic when it comes to Power 3, or when it like Power 3, and then of course when the open takes place, it's going to manipulate a lot of times. It's going to run down, try to purge out the opposing view like this here, right? It took both sides here. So started with the potential for seek and destroy, but price took buy side, took sell side, manipulation, and then did what we wanted it to do, right? What we called for it to do before we even made any decisions to buy, right? So yeah, manipulation is navigating manipulation using what we operate within in terms of tactics. It is truly an art. It's like knowing your enemy before battle. Okay, it's like Sun Tzu, right? The art of war, right? You got to know your enemy and beat your enemy before you even go into battle. understanding how to navigate manipulation and the preparation you can do from the higher time frame and just the whole process we employ. It's got a lot of similarities to, the art of war in terms of mindset from Sun Tzu, So if you haven't read that book, I highly suggest you do so. And you want to think about this as a battlefield. I like thinking about it as a battlefield because that's what it is. We're battling it out with the smart money. They're trying to victimize us and make us go bankrupt while they're, trying to be on a beach and do all these fun things that we wish we could do while destroying people's lives, right? These people. And they teach people a bunch of stupid crap that doesn't even make any sense. It's not even true. Like indicators and all this. They want to shove that stuff down your throat. But that's why we are different. We're retail traders, yes. We don't think like the normal traditional retail investor. And we could do all types of trading using the same concepts like I talked about earlier. So yeah. If you guys want book recommendations too, some of you guys like to read. I do have a list of books that I read. I don't read a lot of books. I definitely didn't read a lot of books for trading because I started with ICT so quickly in my trading career. I knew that a lot of the books were garbage. I have some that are provided in my private community. It's kind of like one of those benefits you get. I have the book that ICT talks about called Street Smarts. It's a $210 book. I got my hands on it and gave it out to my students who want to read it. Just one of those extra benefits you get from being part of our community, the resources and aside from the technicals and education type stuff that we provide. And my amazing community. We've got some amazing people here too, obviously. But yeah. See, I'm assuming that because there's no questions, everything has made sense. And I hope that's the case because clearly I am doing my job, if that's the case. So, yeah. So again, don't hesitate if you guys do have any questions. But yeah. Freddie, I know if you're still here, I know you're new. Does the stuff that I've mentioned make sense or seem like it makes sense? If you're here, definitely let me know in the chat. I think you're the newest out of all my students recently in terms of experience. So yeah, Freddie, if you're here, let me know if this stuff makes sense, so then I can make sure to reiterate if I need to. I have a lot to catch up on. Yeah, that's true. Don't feel like you're behind. Don't be in a rush. I want you to... I think I saw that you joined my free Discord. So I do, if you go... I have to check probably after the call. I do have like a structured list in terms of what I believe students should start with in terms of ICT concepts. For one, if you're just starting, you want to definitely start with the YouTube model just so you can get a model, like something to look for in terms of possible engagement. And then once you go through the 2022 model like 2 or 3 times entirely, which I recommend you do. Most don't do that, but I did it, and that's why I was able to really grasp whatever he was talking about with that fairly quickly too. I did have a lot of experience coming into that, but it's watching it over and over is extremely important. All of the stuff, including what I talk about, is very important to rewatch because you come into a lesson where your mindset is one way. It's focused on the things that you think are important, and your understanding of what's important is just very limited. And you have certain things that you're thinking of when you go into a lesson the first time. You have your focuses and what you're trying to hear, like a buzzword, like order block or breaker or whatever. And you go into each lesson trying to identify those things because they're familiar. So when we do that, we lose sight of some of the lessons that are taught, right? Like throughout the lesson. So as you progress and continue to learn, like me personally, I rewatch the 2016 content every single year because I mean, there's not really much more for me to learn, but you know, it's a good thing to keep refreshed because it's like a knife, right? Your skill set in this is like a knife. If you neglect it, it's going to become dull, and you don't want that because especially if you're trying to do this full time and like a career. So you want to rewatch stuff, okay? Even the 2022 model, watch it a couple of times. Once you have a year experience, go back and watch some of the stuff you first started with. Rewatch them. There's always something to watch and catch up on and just go over once more. We'll never know everything. Doesn't matter who you are. There's too much to know. Okay, unless you're just going to spend your entire life solely focused on learning. It's not a bad idea, right? But you don't want to be stuck in a constant student mindset forever because then you're constantly trying to learn. You're constantly adjusting things. You're never going to have something solidified that you're able to engage. Same with like the models too. If you use too many of them, like you're trying to learn all the models at once, it's not going to be helpful because you're going to have analysis paralysis, especially if you don't have your process fully understood yet. Okay, you want to have one thing that you look for, one or two things max at the start, preferably just one, and you want to spend, at least a week on a series, right? You want to go through the 2016 stuff just as ICT has it laid out, okay? And it's, his 2016 is his mentorship stuff, like the real language explanation, because that's all he's doing. He's explaining the concepts, the language, right? Getting us up to speed with what's important. And so watch those, 1 month, 2 month, 3 month, take them in monthly intervals. Maybe you can go a little bit quicker, maybe at least spend 3 weeks instead of a whole month if you want to kind of try to speed it up a bit. But going through it fast is not going to get you anywhere. Anyone that's new, I made that mistake. So what did I have to do? I had to go back and watch everything over again because I would watch a new video and I'd miss something. Like, oh damn it, I didn't catch that. And then I would, spiral in the beginning and then felt like everything was not working. But all I had to do was focus more on the lessons and really spending quality time getting used to whatever it is he's teaching. And then, was able to watch him live a decent amount and reviews, which was the real mentorship, was the reviews that he did. It's kind of like basically what I'm doing in terms of, because not many people offer what I do. Like they don't spend time doing this. They'd rather just sell you a course and send you on your way so they can go live their life. This is my life. Okay. So I'd rather do this than anything else anyway. Okay. Aside from spending time with family, helping you guys and just enjoying my time, my personal alone time, being a trader. It's one of the joys of my life aside from my family. And then of course, seeing you guys succeed as a result of things that we share. That's why this community is different. And that's why more results, as far as what I've seen, are coming to students quicker than any other like course or anything aside from ICT stuff. Even his stuff, he's a prerequisite, obviously, and all the credit goes to him, of course. But, different perspectives resonate with different people in a different way. Sometimes more effective, sometimes less. And, since I'm not a rocket scientist, okay, I'm not some like genius, the way that I talk about things kind of makes it a little easier to understand and easier to grasp. But again, like I was saying, you want to make sure you go through things multiple times because your understanding is in one place when you watch one video or one series. And then once you go through it once, your experience has now increased. Your understanding of what's important to specific topics or just in general has now increased. So now the next time you go through a video or a series you went through, you're going to now pick up on other things, other buzzwords that are important. Okay? And it's just going to continuously grow until you have mined everything from each lesson. And of course, it takes time. It's going to take time. But I have 10 categories in my Discord channel under trading plan development, the section. And if you can build a process and system as a whole that incorporates each one of those 10 categories in terms of operations, like delivery of, from execution to bias and mindset management and all these different things. If you can build a process around all those, all of that will become you as the trader. And once you have each of those 10 categories answered and have a process for each of those, there's obviously subcategories within them as well, which I go in depth in my private community. But on its face, right, if you get a process that can answer all those questions or have an answer to each of those subjects I have laid out, it's undeniable that you have a system that is going to eventually be reliable, as long as you can operate it properly. And mind you, I give out every single element to each of those categories. You just have to figure out where everything fits, at least here on YouTube, and even with that, it's still very, very effective, nothing's really held back really. I mentioned pretty much everything that I talk about. Just the private community gets more access to me, more access to more students, more access to more resources, more live calls, more just support, everything else. But yeah, again, keep that in mind, right? So if you haven't looked at my trading plan development section and the 10 different categories that I have labeled, which is my trading plan development recipe, I guess you could say. If you haven't looked at it and kind of reflected to yourself about whether you have an answer to those, or if you can explain in great detail different elements to those categories, if you haven't tried to do that, I highly advise you do that by the end of the week. That is so important. And I don't care who you are as a trader. You could be a normal retail trader, okay? The categories are still beneficial because that's how I developed. And within 6 years, I've been able to do some insane things and not only help others do the same. And that's not just random. It's not just because. It's because I built a system around my own learning that, I discovered is, highly effective for others as well. Because it gets you focused on what's important, right? So some of you guys may be asking or thinking to yourself, why am I not looking at price as like that much at this current moment? Why am I talking about these other things? Well, look at price, right? We've mentioned kind of what we've mentioned in terms of what's important. And we're just simply watching price do what it's doing. It is navigating here. It has spent a lot of time in here. We are approaching another macro. So that macro may be used, similar to how this one was, to then inject volatility to then target the overall buy side, which has been layered here, layer high, multiple layered highs, with this being available up here. Okay, so I'm looking for this. If you can find your model in here, whatever that is, a breaker, YouTube model, run on stop, shift in market structure, fair value gap, if you can find that in here, coupled with the overall analysis that we've done supporting the buys, maybe DXY can also tank. If we could find all that stuff overlapping inside of a macro coming up, the 750 macro, you maybe will have an opportunity to engage, right, or study something in there. But a lot of the things that I'm mentioning here are extremely important. It's also why I'm obviously mentioning them. But yeah, so homework for you guys, if you want to have a task for me to give you, I want you guys to definitely go look at those 10 categories. And I want you to DM me personally, either on Discord or in my YouTube channel, in the comments, or on my Instagram. I don't know why the hell I just ran blank. Right? If you guys could send me a reflection on that and just kind of explain each category to yourself, and then send it to me, or everything that you can find yourself understanding about each category and send it. I think that'll be very beneficial to you. It'll help you realize where you're truly at. Okay? It's one of those things. People think it's boring. Back testing is boring. Okay, great. But so is being broke. Okay? And so is constantly being on a treadmill, just never moving and continuously getting punished by the market. That's painful and boring. So you gotta pick your boring. The boring stuff is what's going to get you to where you're trying to go. And showing up here obviously is very helpful. But yeah, so definitely do that if you guys have time this week, especially those that are in my private community. Some of you guys haven't done that, haven't really focused on it too much, been asking too much. But I think there's like, I think it was like 16, 17 of you guys that haven't sent me that, like a reflection on that when I've asked. So I'm going to have to reach out to you guys. So I want to keep you accountable. So definitely send me that. Or you could just send me your trading plan, which again is something I always ask for like every year. I don't push too hard on it because a lot of you guys have done it, but you need to send me a trading plan so I can observe, because it helps me help you, aside from you guys DMing me, which many of you guys do regularly, and keep me updated. I can't read your mind, okay? I can't know where everyone's at every moment of every day, and what you guys are struggling with, unless you voice it to me. That goes for you guys here on YouTube too. Voice your issues, and I'll do my best to try to give you a drill that you could practice to combat it. And yeah. So again, in here, going into the macro, like I said, it's probably going to be the time when price is going to now decide to run. Notice the time the price took to do nothing, right? After it did something, it ended up doing nothing. Now time is kicking back in line, and we have our target from earlier, right? So let's see if this time and this PD array, which is price, can send price higher here with this inversion fair value gap being tapped into yet again after consolidation, to then target the high in inside of the macro. And see if there's anything that you can consider in here as a model for entry. Go to the 15 second. Oops, let me fix that. So 5 minutes before, 5 minutes after a macro still presents it with a pretty valid idea, right? So yeah. So it doesn't always have to be right in the macro where you take an entry, but the move has to start in the intended direction inside the macro. That's what we'd prefer to see generally when you're using a macro. Sometimes it will show up. A lot of times it'll show up, whatever your model is, it'll show up inside the macro. 5 minutes before, 5 minutes after is also a valid frame of reference, right? So yeah. So if we move up, navigate some of the time frames a bit. Let's look at. So we got a feel for what the lower time frame's doing. Now we got to see what. Oh, okay. Nah, I found the fair value gap I was looking at. Okay, so pretty solidly tapped into that. 21,640. 21,638. Yeah, so we pretty much closed in all of this and tapped into this 30-minute order block. Closed in the whole fair value gap. I think I'm going to trust this 1 hour a little bit more in terms of it being the next leg higher. Once we get up into here again, it's kind of demanding a little too much in my opinion to try to get it to go even further. Just because NFP's tomorrow, they're not going to want to do a bunch of crazy stuff for NFP. I want you guys to consider the things we talked about that help justify us continuing to press price to the buy side. The mindset that was shared today is super important. We share it all the time when it comes to reading price and telling the story. There's lots of different elements, obviously. We talk about it every single week, every day in my private community. But, there's been a lot to learn. If you didn't engage today, that's fine. It's nothing to beat yourself up about. I think I saw something earlier I need to look at. I was upset I missed Sunday's. Oh, okay. Tony, let's just say you are still perfect, okay? I think your attendance has been better than any student that has come across me this year, aside from some that are in my private community. Like, you are the main you're like number one in attendance. You're here constantly, and you've been seeing results as a result. What is that result, you may ask, if you're new here listening to me talk to Tony? He passed a funded account with his time he spent with me. You know, he came, didn't have a funded account, spent a couple months, and he has his new funded accounts, and he's just been absolutely crushing it, both mentally and technically, and it's been amazing to see. Things that I'm very, very proud of is seeing you guys succeed. How often do you do YouTube lives? I have it kind of in the description on my videos in every single live call, and then I also have it in the description of the channel, but it's every Sunday and Tuesday. So Sunday is weekly prep, quarterly prep, monthly prep, daily prep type of process. It's basically where I teach navigation of bias and narrative, what we should expect throughout the week, quarterly, monthly, daily, and everything in between in terms of what's related to that. I answer questions and do all that type of stuff. It's basically your guys' time to really hammer me with any questions and try to solidify the processes. And then Tuesdays is pretty much what we did today. It's the result of what's taken place or assumed on Sunday. And then, of course, we're adding the element of reading price, the story, invalidation, validation, when to take an execution or when not to, right? When to consider the different conditions, which is also kind of touched on a pretty large amount on Sundays. So it's just like a master class every single week, at least for the most part. For those that listen, that take this serious, that aren't coming to me saying, hey, sir, can I have a bunch of signals because I'm a signal junkie and I don't want to do it myself. So can you just give, like, if you don't have that mindset, this is a home for you. If you do have that mindset, like you want me to just spoon feed you signals, which I do give signals, you're just going to have to read between the lines, like where I'm giving them. Like today, I talked about the buy inside that for value gap using the YouTube model down here, right? Whether you were able to read through the lines, obviously it's something that you have to reason with. Why did I think that this was a possible good opportunity, right? What could have got me back inside the market? Why is price moving up? Why can I trust it? How can I go and develop that skill set of being able to trust price and read the story the price is telling me so I can be an effective independent trader? That is what you get when you spend time here, aside from the signals. Although they are offered, okay, they're mentioned. I don't take 500 trades a day, and I only trade the indices. So, again, I've been given swing trade ideas for the last year, and my swing trade ideas, a couple of them went over 1,500 points, and I shared that on Instagram. And then, of course, I talked about it and hinted to it pretty clearly in the private community, and then on the in the free community as well. It was a massive start to the year. It's absolutely insanity. Biggest start to the year I've ever had. I mean, it's crazy. All of it was recorded live too, both in my private community for their live calls, and then of course here on YouTube. Tony said, "You got to put in the work yourself. This is the foundation." That was bias. That was bias analysis, base analysis on. Yeah. 100%. You could give someone a tool. You can teach somebody a specific skill set, but if they don't go in and try to apply it themselves and gain their own experience with the tools, if you don't do that, you're not going to get anywhere. You're going to be wasting your time. You might as well just go to the casino. You probably have better odds winning at that if you're not going to put in the work. And you just want signals. Imagine if someone's basing their whole trading career off of someone taking signals. There's nothing wrong with it if you're just looking to follow someone that's good, that, because you can't trade maybe or your life doesn't permit it, then it's okay to do signals. By the way, what I just mentioned about the macro giving us that delivery to the buy side, that is what I talk about in terms of hinting at a signal. Okay, hints. Okay, it's a hint, right? I said that this was the target and have not deviated from this being the target. All morning, I favored buys. Even when it was shorting, I said I want to see that set up as a buy. One-sided. I framed out an idea or explained an idea for anyone that did have a short mentality, like they wanted to take a short. You could have bagged 20 to 30 points here. But of course, that's not what I would have recommended, but that's just my opinion. If you would have felt more comfortable in taking the counter trend ideas rather than the trending ideas, that's something you want to lean into, because you may be a contrarian trader rather than a other style of trader, trading with the trend, you know. But yeah, we've been one-sided, focused on the buy side here. And again, beautifully delivered macro. Time and price. Time and price. Okay. This run higher that I called earlier too, or that I talked about or hinted to and showed an execution on. Time 7. Okay, so inside the 650 to 710 macro. Again, time, right, inside the 750 to 810 macro, right? 5 minutes before, like I mentioned, started the move higher, right? This has been rooted on whether this is going to hold or not. This whole entire run higher here, if you would have participated and took a buy that I called, when I was in my private community, or maybe you took the opinion from trading at this bullish order block here on the higher time frame, if you would have taken this from Sunday's call and you're a swing trader, you were basically given a signal that basically ran, if you just merge in your own perspective in terms of the analysis, you had the opportunity to bag a 400 plus point move if you're a swing trader. If you just focus on my higher time frame perspective, right? A lot of the stuff, again, that I teach on a lower time frame can be used on the higher time frame. You know, it's mentioned constantly. But if you took my analysis from Sunday, which generally is spot on, you know, when it's not, we figure out why and make adjustments. But 75 to 91% of the time, this has transpired as a result of our Sunday analysis. And it's beautiful now, because now I don't got to just say it. You can go watch the videos and make your own opinion, or you could just listen to students that are here continuously. For example, Tony, I have another student named Nutty Fafa, one of my superstar students named Harley, who's in here earlier. I'm not sure if he's here, but people like them, including like a handful of others, they're here constantly. They see it over and over. People like Harley have been with me for over a year. Some students have been with me for over 3 years. At the very first start, when I was going public with things, and so they've just been able to witness the progression, the improvements, the lethality of what it is that we do, the consistency, from every perspective. For every asset, okay, every single asset we call, like for example, a great example is the currencies. I called this entire run lower and higher in a market maker buy model fashion. I've been pointing to this high for weeks. Way down here, we were talking about price going all the way up here if we shifted above the high. It shifted above the high, got above this, created a market maker buy model, and ever since then, every retracement, we've been identifying the fair value gap, internal range, to then seek external range. Marched it all the way up, right? So every single asset that we have talked about has came to fruition. Even these assets that are cracked in correlation, right? I called for this low for weeks. We got down below this as a bearish breaker. I talked about that as a bearish breaker way back there. Go back into April and watch the video, right? It's all been this, the reaction from this weekly fair value gap, right? Calling price into that fair value gap. I navigated with everybody live on a Sunday, right? And so all this, right? The delivery to the downside, favoring to the downside, even with the crack and correlation, we've still been able to identify things. It's just incredible, right? So the link is not working for the private community. What? Okay, let me go see what's happening. What link are you using? Can you copy and paste the one that you're using? Because I haven't had anybody telling me that it's not working. Maybe it just stopped working. Yeah, look at that beautiful rise. Isn't it just beautiful? Isn't it just amazing? Like, this ain't one-off. This is constant. I mean, it's just shocking to me. Like, I can't even talk about this to anybody because just like the level it's at in terms of accuracy, consistency. I mean, people just look at me like I'm an idiot. Like I'm literally talking out my ass. Like I never thought in a million years when I first started trading that the accuracy and confidence and my ability to be a trader and call the markets like freaking Houdini. Like I never thought for a second that it would be at the level it's at. I thought, oh, here and there, I'll be able to be consistent enough and just, make a little money here and there. No. It's well beyond, just like what ICT says, the goals that you start with are going to be too small. They're going to be too small. You know what I mean? So Reinvestment Broker, it's a very interesting name, by the way. Can you tell me what link you're using? Paste it in the chat so I can see which one you're using, so I can make sure you're using the right one, which I'm not sure how you would get a wrong one unless something expired. Let's go double check some stuff. Yeah, if you could send me that, that would be fantastic, so I can figure out what in the hell is happening. It says it's visual. No, I don't see a link. Do you follow me on any other social media? If you follow me on like Instagram, if you could just DM me the link. I do see something that doesn't really... I don't really like what I'm seeing here. That I'm checking up on. But yeah, we got that beautiful... Everything we've talked about today has pretty much worked out. We're kind of going into overtime now, but yeah, I said that if we got up to this area in here, that is pretty much a wrap in terms of analysis. So again, let's try to end this with some questions. And Reinvestment Broker, I'm going to look into whatever is going on. It is the one that has joined here for the private Discord community. No, so I understand like what would be present. Are you talking about the one in the description of this video? Let me go see what the hell's happening. What's up, Chawazi? Yeah, you're just a little bit late, brother. We've called a bunch of different things. We called the run below here, right? Or we navigated it. First and foremost, we took out the buy side, navigated it going lower. It failed to get there. Got above the first presented for value gap, regular trading hours gap. I called out this YouTube model in here, hinted to it, delivered flawlessly. Price continued to deliver. Inversion for value gap in here, continued. I executed personally from here to there. Price declined in here, and then within the macros offered the move I just mentioned here for the buy. And then, of course, we talked about this one too. Inside this inversion, we talked about if price got above this and stayed above it, it would continue to want to race higher. This here was my overall target I wanted to aim for, and that was a 1 hour fair value gap high. And I talked about the macro delivering price to the buy side, and that is what we ended up engaging or talking about as a potential engagement slash signal slash, you know, whatever you want to look at it as, which got us up into here. And now kind of puts a ribbon on the analysis portion of things. So now I want to answer questions. So again, if you guys have questions, please let me know in the chat, because that'll be what we're going to open this up to solely at this current moment, as we just watch price continue to do what it's doing. And then, you know, once I solidify any questions, or if you guys don't have any questions, you know, we'll figure out, or we'll put a ribbon on it and let everybody go on about their day. Yeah, let me go pull this up real quick. So reinvestment broker guy, looks like everything is operational. Doesn't show there's any issues on my end. I'm not entirely sure what the issue could be. Does anybody else have any issues with that? Like, what does it say? What do you mean it doesn't work specifically? Does it not load up? Like, what exactly is it? And then I also want to ask, what country are you from? Because I've noticed that places like Iran, you know, different countries that are controversial, I guess you could say, they're not being accepted, even with PayPal, given the landscape of what's happening in the world. So that's kind of been an issue. So yeah, let me know where you're from, because I've had an issue twice this year, and it was two students from like Iran. Okay, and I tried to figure out a way to get around it somehow. I even talked to my payment people, the people that software or whatever, and they couldn't even give me a workaround, unless I had like physical cash given to me. And unfortunately, crypto, I'm trying to figure out a way to do crypto for payments. It's the future, right? So maybe that'll be an option. I just got to figure out how to link it. But yeah, reinvestment, let me know like more of a descriptive situation about like what's happening. And if I can get any of you guys in here that you know, can go and also click the link that's in the description. You don't have to go purchase anything, right? I'm not asking you to do that if you don't want to, but just go click on it and come and report back to me what's happening on your end too. See if it's maybe just what's happening with him, or because on my end it shows everything is totally fine. I had some issues with my free community too, and it was because the link expired continuously, so I had to figure out how to stop that. It's always something with technology. It's like, dude, really? It's wonderful when it works, but you know, double-edged sword. So let me see. So the S&P has beautifully delivered too. Got a pretty good slide. If it's the WAP one, it's saying nothing to see here yet on my side. What? What? That is interesting. Yeah, what the hell is happening? That makes no sense. Nothing to see here yet. What the fuck? It's the one that says wap.com/WMG trading / right? Chawazi? Is it that one? What a fucking weird ass thing. I wonder why it's doing that. Really? Wonder why, dude. What? What? That's so strange. I don't know why. Oh, that is so irritating. What the hell's happening? That's not good. Oh, man. Well, it says everything's live. I don't get it. Alright, let's try this. Oh my god, why the heck is it doing that? So Chawazi, actually, do you have some time right now, real quick? Do you have a little bit of time? Like maybe 20 minutes? So I can figure out what the fuck is happening. I'm not sure why it's doing that. Can you click on this link and try it real quick? Okay, cool. You follow me on Instagram too, right? Or you're in my I think you're in my free Discord as well. But yeah, instead of having everybody just sit and kind of go through this with me, I guess we'll put a ribbon on it. Everything that we've talked about pretty much is played out per usual. So yeah. So with that being the case, I guess we will put a ribbon on it. Definitely give this video live call a review. The link you've sent, it's working. So the one that I just sent here is working. So the one that I just sent is working. He's so strange if that's the one, if it's working. The link you've sent is working. Yeah, it's taking me. Unlike the ones in the description. What in the world? That is devastating. I need to go change all of that. I'm grateful for you guys' patience. At least I just figured out what the hell I gotta do. It's always something. A lot of these problems, like for example with WAP, like they've given me such a huge hard time with PayPal. Like some people don't, they need to use PayPal, and some people are able to trade crypto or pay with crypto, but for some reason, like they're giving me so many problems. I'm like, what the fuck? I'm like, why are you giving me issues? Damn, you're just gonna use PayPal by itself. Just try to get around these platforms. Some of them are just not that great. Yes, please do send me that on IG. But yeah, so I appreciate you guys' patience. Again, everything we've talked about came to fruition. I'm grateful that you guys have mentioned some of the things you mentioned to me today in terms of the link. So thank you, Chawazi. Thank you, Investment Broker. It's an interesting name. I'm assuming that you're maybe with an actual broker, possibly. That'd be kind of cool. But yeah, thank you guys for letting me know that. Again, if there's ever any issues with anything, just let me know. For my private community, of course, I always tell you, just let me know so I can fix it. Same with normal Discord, so I can fix it. Just let me know any issues. And again, just if you guys can do me a favor, let me know what you got the most value out of today, and just with your time here in general. What has been the most valuable thing, and then if you could let me know how long you guys have been watching the content, that would be much appreciated. Again, a homework assignment: go through the 10 sections or categories that I have laid out in my free Discord. Same with my private community students. Please do the same thing, and just break down what you understand about each topic and see if you can identify a process that fits within each of those 10 categories. And then wherever you feel you can't do that, or whatever you feel you can't really explain much, I mean, that's already doing what it's meant to do, is identifying your weaknesses and highlighting your strengths and then keeping you organized, setting up your business of trading as a business. And it makes you more of a professional, and it'll help you progress better, know where your weaknesses are, and how you can go about improving. So definitely, if you could do those things for me, I would be greatly appreciative of that. So again, thank you guys so much for the time you spend. You could be anywhere else, but you spend your time with me for hours, and I couldn't be more grateful for that and humbled by that reality. So thank you for your time. Again, I hope you guys have gotten value. Hope you guys have been safe. I hope that today made sense. I hope Sunday made sense, and I hope seeing things come to fruition as they do has been something very impactful and helpful to you. And again, if you have any questions about anything, if you have any things that you would like to see me do more of, anything along those lines, let me know. Or if you just simply need some advice, maybe you're going through something like losses or something, and you just want to talk about how to overcome that, my DM is always open. I wish it was the case for me, or like when I was first starting out, that I would have had that type of resource. But I'm more than happy to be that resource for you guys and help in any way that I can. Okay. So again, thank you guys so much. God bless each and every one of you. Please be careful. Don't do anything crazy today. Price has delivered pretty nicely. It's done everything we have wanted it to do. So dissect what took us up to there and the process behind that, and instead of worrying about trying to take an entry today, because anything after today, after the AM session, maybe even after the PM session, anything after max the PM session, it's going to be low probability until the news comes out. Okay, so don't do anything crazy. If you are a PM session trader and you're going to take a trade, take my advice and cut your risk by half. Don't be reckless. 1 trade, 2 max if you feel it's necessary. But if you take a loss, just chalk it up as a losing day and just try to work through that and sit with that feeling so you can overcome it. Okay. So yeah, again, thanks guys. God bless, and I will see you guys on Sunday, and I will be active in both my private and normal Discord community, so you can reach me there. Okay. So have a blessed day, you guys, and thanks again for your time, and I'll see you soon.